I'm Alan Mattamana, a partner with Fairview Capital. Over the last few months, we've been conducting a series of video interviews with industry thought leaders. And they've been on topics of interest to our limited partners who invest with us, our general partners, and members of the broader venture capital and private equity ecosystem. We select the topics because they're germane to the industry at large. They typically focus on issues and conversations currently of most interest to the widest audience. And today, I would like to focus on diversity and inclusion in the venture capital industry. And to help me with that today, it gives me great pleasure to introduce Adeyemi Ajao, the founding general partner of Base10 Partners. Base10 is one of the largest Black-led venture capital funds in the country, and Fairview is proud to be a limited partner with Base10. So welcome, Ade. And first of all, congratulations on your recent oversubscribed fundraise for Fund 2.
Thank you very much, Alan. It is an absolute pleasure to be here with you today. And thank you from me and from all the team to the Fairview team for believing in us. It's with great honor that we look at our partnership.
Thank you for that. You know, Ade, maybe a good place to start would be if you could share some aspects of your personal story and your background and the path that led to you co-founding Base10.
Absolutely. So before starting Base10 and going fully to the investment side, I was an entrepreneur. And you know, the Ade is short for Adeyemi. That's a Nigerian name, but the accent gives away that I grew up in Spain. So although I spent my early childhood in Nigeria, we moved to Spain when I was very young. I'm from Nigerian father and a Spanish mother. And I went to college in Spain, and that's where I started my first company. So I grew up coding, and back in 2005, when I was in my senior year, after trying about 25 different projects that went to nothing, one of them took off, and it turned into a company called 20, which became essentially the equivalent of Facebook in Spain. We were very lucky, and that company got acquired a few years later by Telefónica, which is the largest telecom company in Spain. And right after that, having such a good experience at a young age, I decided, well, I want to try this again, but this time in Silicon Valley. So I moved here now 12 years ago, initially to study my MBA at Stanford, but really with the idea of starting another company. And at graduation, 2 years later, I was lucky enough to start two simultaneously with two different classmates, one in San Francisco and one in Latin America. The one in San Francisco was an artificial intelligence company called Identified that will help companies decide who to hire based on data. And that ended up being a very good run, and we sold 4 years later to Workday. It was actually Workday's first acquisition. And the one in Latin America that I helped start, but I didn't run full time. My co-founder likes to say that is today a $2 billion company precisely because I didn't run it full time. But I was hopefully helpful to him. And it's called Cabify. It's today the equivalent of Uber in Latin America. And after that experience, and contemplating about whether to join Workday full-time as part of the acquisition, I got a very good opportunity to help start the corporate venture fund of Workday called Workday Ventures. And I had been investing personally on the side of entrepreneurship essentially since I moved here. I had done about 20 or 30 investments at the time, but I decided to take that opportunity and really love it because I see investing or early stage investing as the next best thing to starting your own company, is helping others that hopefully find your experience somewhat useful. So I was essentially hooked, did Workday Ventures for about 2 years, and got lucky enough to have my first investment in Workday Ventures being my current Base10 co-founder, TJ, who has essentially the opposite background as me. He grew up in LA, started as an investor in Summit, Accel, and Cotu before turning an entrepreneur in a company also in the job space called Jobber. And once he sold that to Monster 2 years after the Workday investment, we had gotten to know each other very well. And we decided, hey, we have complementary skill sets. We love working with each other, and we see an opportunity to do things a little bit differently. So why don't we do this together? And I want to point out that, Alan, actually, you are one of the very first persons that I brainstormed with back in the day, if the world needed another venture capital fund while I was still at Workday Ventures.
I remember that. I remember that well. And you didn't mention this, but I'll say it as well. You also have an MBA from Stanford, a JD in law, a master's in economics, and I believe also a machine learning certificate from Stanford. So you've been very busy.
I have been very busy. I've also been, very lucky of having been able to go to those places and have the opportunities to meet wonderful people. So yeah, overall, definitely not getting bored.
Great. So Ade, diversity and inclusion, clearly very important to you and to Base10 as a firm. You've been a thought leader on how to increase diversity in the venture capital industry. We know that the industry faces significant challenges today in addressing the lack of diversity in the entrepreneurial ecosystem. So tell us how Base10 as a firm has addressed this issue of diversity and inclusion in the tech space.
Absolutely. In a couple of ways, I'll say that first of all, from a thesis point of view, as you know, Alan, we want to invest in automation for the real economy. And how we describe that and how we think about that is the biggest problems that affect the vast majority of people. Or another way to put it, problems for the 99%. And the reason we are interested in that is, one, because we think it's good. We think that technology and automation can help large numbers of people. But two, we think it's a massive economic opportunity. Because, up until 10 years ago, tech was its own tiny sector of the economy compared to everything else. But today, and particularly post-COVID, we're seeing that tech is just touching everything, from real estate to agriculture to commerce. So when we started Base10, we're like, well, we really want to be the firm that understands how real estate or how agriculture are going to be transformed by technology. And then when we thought one level deeper about, well, who are the kind of people that are actually going to be out there starting businesses in trucking, in waste management, in agriculture, who is going to be passionate about that? And our obvious conclusion was, well, not everyone is going to be a PhD in artificial intelligence from Stanford that grew up in the Bay Area. Like a lot of them are going to be in different parts of the country or the world. And because they're going to be in different parts of the country and the world, they're probably going to come from a demographic and ethnic background that is more different and in general more representative of the general population. So when we were thinking like that, really top down and thinking about what kind of firm we had to build so we could identify those founders, and then we look at the rest of the industry, we're like, well, it seems, just looking at the numbers, that Silicon Valley has a clear bias to a certain type of founder and a certain type of business. Some firms will even explicitly say that they don't really like to invest outside Silicon Valley or outside AI or SaaS or whatever. So we thought, how can we build a firm that doesn't have the same blind spots? Because we truly believe there is an economic opportunity in just making sure that we back founders that represent those demographics. And that was I would say, one of the founding principles of Base10. I think, now we have been almost 4 years at it. And as we have evolved, and as you have mentioned, we have had the opportunity to become one of the largest funds led by a person of color. We have thought about our role even more expansively and thought, well, so we feel relatively good about some of the systems we're building, about identifying those founders and getting rid of those blind spots. But let's take it one more step forward. Now that we're building a platform, what can we do to help be part of the solution of this bias problem that clearly we have as an industry, not only in VC, but in technology as a whole. And that is why conjointly with our Fund 2 announcement, we decided to put forward our diversity pledge, which really talks about two things. One, it codifies a lot of the best practices we have been trying to follow about getting rid of blind spots when it comes to diversity. And two, it puts forward an economic commitment. And the economic commitment is that, as you know, we have pledged that 1% of all carry and profits for Base10 will go towards institutions and nonprofits that are helping address systemic diversity issues. And we think that is a small step, but an important one, because if it helps signal to the industry that there is a collective responsibility that we all have, that number over time can be really meaningful. So that is, in summary, how we are currently thinking about it.
The Base10 diversity pledge is quite a statement, and certainly made a huge splash, I think, when it was announced a number of months ago. How has the industry responded to it? Have you seen people pick it up and move with it? Tell us the response.
Absolutely. So we are encouraged. We are encouraged on a number of fronts, but it's very early. So we're also cautious. I would say that, first of all, as you know, when we put forward the diversity pledge, we didn't do it alone. We talked to a number of institutions, and particularly funds that have truly been investing in diverse founders for years, because we realize we don't have all the answers at all. And we have to come at this with the humility of knowing that there are a lot of things that we ourselves are not doing right. And we have to learn from the people that have been at it for years. And I mentioned that because a number of those funds like Plexo Capital or like Precursor Ventures joined the diversity pledge from the get-go. After that, we have had a number of funds, and those goes from growth funds to early stage funds, generalists, diversity focus, that have reached out and have either said, hey, I'm working on something adjacent, do you want to join forces? Or, hey, I want to learn more about what you're doing, and maybe I want to join it. And still, this was only a couple of months ago, so we are still figuring out how do we exactly execute that, and how do we make it very easy for people to adopt it. But one insight that is coming out of it is that it feels like a special moment, but we are all at the risk that if we don't get the momentum, it could fly. So one of the core pillars that we are trying to think through is, how do we make this permanent? How do we make sure that this is something that we report on every year and that people can join easily? And that is still a work in progress.
That's great. I think one of the things that we certainly have observed is that there are a lot of good intentions around increasing diversity, but they have not always translated into action. And so how have you been intentional about that, about making sure that your investment goals and internal hiring goals on diversity are being met in the companies that you're involved with?
Absolutely. So, we are measuring, the short answer is measurement, reporting, and then number 3, alignment of values. And I will go into the 3 of them. Measurement is both about measuring the outcomes, but also measuring the process. So we are, well, as you know, and as we discussed when we came out with the pledge, we talk about a number of factors that go from sourcing to actual investments, to hiring, to connecting with the community, to bias training, and we're coming up with OKRs in all of them. And then it goes to the second part, with its reporting. We are going to make sure that we report on not only on the outcomes, but on also the OKRs of processes to our LPs and to the wider community on a yearly basis, as a way of holding ourselves accountable. And the third part of that is alignment of outcomes, and here, alignment of values. And there is where, having LPs like you and the Fairview team in Base10 is really important, because we know that you actually care about those numbers and you actually care about what we're doing. So just by the process of measuring and reporting that to people that can hold us accountable, we think it will be a very positive feedback loop, and hopefully something that inspires other firms to do the same.
That's great. Turning to fundraising, Ade, so Fairview has been an investor with diverse managers since inception 25 years ago, and we do that through dedicated programs. We also know that the current pandemic is likely to affect diverse managers disproportionately when it comes to fundraising, particularly because they generally represent newer firms and generally have had fewer institutional investors historically. You've been very successful at it. How has that experience been, and do you have any advice for diverse managers raising capital today?
Yes. So, I think you're very right. I think it is a very real thing that the current environment is going to affect diverse managers disproportionately. In my experience, there are a number of things that I will say that can be tactically useful, and that I have been sharing with a few friends that are in that position. Number one, there are people out there that want to help, even if they're not your current LPs. There are people out there that you can reach out to help, that have seen environments like this or similar to this, and that can offer very helpful advice on navigating it. And as a very clear example, Alan, you and I were brainstorming, and you were giving me advice 2 years before, I believe, Fairview actually became an LP in Base10. So making sure that in times like this, you reach to those relationships can lead down the line to the institutional investment that every emerging manager is looking for. So I'll say that, number one. Number two, in the same way that the current environment makes it a little bit more difficult to close capital, it is also, as we were mentioning before, there are a lot of good intentions out there about supporting diverse managers. And there are institutions, particularly endowments, foundations, pension funds, that are realizing that they have an underrepresentation of those diverse managers. And some are working with firms like Fairview, some are trying to do their own direct programs, some have a mix, but they're actually putting statements out there about, hey, we want to find more diverse managers. So one of the things that we did was actually be on the look for who were those institutions that were putting those statements out there, and proactively reach out to them. Be like, hey, we're a new firm. We don't know if we are focused for you yet, but we want to build that relationship. So being very proactive about that, I think is important, particularly at a time like this. And then number three, and I got this advice early on, having been an entrepreneur before, I had a bias of thinking that fundraising was going to be a hard but relatively fast process, and that was going to be based on people getting enamored with the story and the potential, which meant I didn't understand institutional fundraising. The way I describe it now is like, it's not really consumer sales. Like raising from VCs is consumer sales. It's based on emotion. Raising from institutions is enterprise sales. Takes a long time, number of stakeholders, have to make sure that the product is as risk-free as possible. And really that comes to trying to act as institutional as possible. And those are many little things that can be overlooked, that go from back office to compliance, to communication, to updates, like a lot of things that seem boring and one-on-one unimportant, but I think in the combination really help set up some managers from others, and particularly true with investment with emerging managers. And I think particularly true with diverse managers, because in general, we already have a bias problem with the general industry. So I almost felt we almost have to overcompensate and come across as the most professional that we can. And that is something that we definitely try to do. So I think in summary, I would say over-indexing in institutionalizing, being very proactive about reaching out to LPs, particularly those that have expressed that actually want to support diverse managers, and not being shy about reaching out to contacts that might not be an immediate LP, but that you can build a relationship with during this time and get good advice in the interim.
That's terrific advice, Ade. As an LP in Base10, we at Fairview are thrilled to be able to participate in what is going to be the success of your future funds from a financial return perspective. But I think as you've articulated, you clearly have hopes and aspirations for the industry's future that go beyond the financial return of the funds. And so talk about that a little bit. What would you like to see happen in the venture capital and tech space in the future as it relates to diversity and inclusion? And what are some of the catalysts that you believe will allow that to happen?
Absolutely. So I think at the highest level, what we would love to see is that the demographic representation of founders, and that is founders of companies that are attracting venture capital, will approaches the demographic representation of the general population. And that is when it comes to gender, to ethnicity, to a lot of different factors. Whereas today, that is not the case. As we know, unfortunately, most of the funding is going almost exclusively to white male teams. I think the number for 2019 was something like 70% of rounds or something like that. We think that the way to get there will be for this moment to truly last and for these good intentions to turn into sustainable action. And I think the only way we do that is if we all, and I'm including Base10 here, we all realize that we are part of the problem because we can all do more. So we all need to be part of the solution, and we all need to hold ourselves accountable. And that comes to the last part, which is who do we hold ourselves accountable to? And that is, the largest community, and I think leading the way, the institutions that have been looking at this and doing this for a long time. So for example, for us to be able to, be working with you and with Fairview and be able to say, hey, this is what we're doing, this is our progress, based on everything you have seen. Is this good? Is this bad? Again, it ultimately holds us accountable. So I think for the rest of the industry, everyone has to think, okay, do I have people like this close to me? Am I tracking the right things? Am I being transparent about them? And am I going to do this sustainable? And it's a positive feedback loop, because I think ultimately we are hearing from founders, hey, we respect a lot of the things you guys are doing and have said that you're going to do, and we're more inclined to work with firms like you than with other firms. So we do think that momentum is real, and we do think the opportunity is there for the industry to adopt it and ultimately to get to that more normal demographic representation that really should be there.
Well, I think that sentiment on momentum is a wonderful note to conclude on. Ade, thank you very much for spending the time with us today, for your insights. We value our partnership with you and the rest of the team at Base10, and we also value and applaud your efforts on diversity and inclusion in the venture industry. And we look forward to your future success.
Thank you very much, Alan. It is an absolute honor.